Hello and welcome guys. Okay, so in this video I'll give you a very easy strategy and very effective using support resistances. Now this strategy is for shorter time frames, so for 5, 10, 15 minute trades. If you're trading on Spectre, this is the best strategy to follow. So yeah, let's get started. So before I start, I'd like you to give this video a thumbs up. If you like the content, subscribe to my channel and share this video with your family and friends. So you can see on my screen I have Euro USD. This is a daily chart, and what I can see right now is that the market is trending up, right? So this is what I do. First thing I look at, when I look at the charts, I look at the overall trend of the market, if the market is trending up or down, or if the market is moving sideways. So I get an idea of how to kind of approach this trading pair. So on the daily chart, it's clear the market is uptrending. I need shorter time frames. So I need 5 minutes, 10 minutes, 15-minute time frames, and also hourly time frames. Most importantly, 5, 15, and hourly. And you can see I have them right in front of me right there on TradingView. So if you're trading on Spectre, you can actually do analysis right on the Spectre platform. So they give you all the tools. I prefer TradingView because the screen is bigger and it's just easy for me to draw and explain. Okay, so on the hourly time frame, let's go to the 1 hour time frame. So I'm going to the 1 hour time frame because I want to look at what happened in the recent history, right? So Euro USD, again, this is a nice big impulse wave towards the upside, rejection there, a bit of a correction, and then another small market tried to go back to that the resistance. It failed, went back down again, and is trying again one more time. So that's telling me something. The market is not really trending up in this case. It's more like it's moving sideways, right? It's very clear the market is moving sideways, and it's creating these highs here, and I can use that highs to draw something called a resistance, right? So resistance line is something when the price is rejected multiple times from that area, from that price range, a zone is what I call a resistance. On the opposite side, down below, I have something called a support. So support is something where the price bounced off from. Okay, now drawing a support level here is good, is important as well, but it's not really needed right now because the market right now is moving here, right? So we have price action concentrated in this zone. So I want to see what I can do with this time frame that I have right now in this current scenario. So I'm going to draw another support level here, and the reason why I'm drawing it here, although it's not very, very strong, is because the market did bounce from that level here once. Okay, there was a minor correction, right, and then went back up, and when it came back down here one more time, it held off very nicely. So that level is kind of significant to me. I leave that a line as my support right there. So all right, so what are we doing when we are looking at these levels, right? We are looking to either go with the trend or go against the trend. So going with the trend means that going with the move, right? Going with the current price action. So the current price action here is up. In this case too, it was up, right? But you can see clearly the market rejected, came back down. Again, if the market goes back up, will it test and fall back down again, or will it continue to go up? This is where we need to understand what to do. Okay, now listen to this very carefully because this is very important. You're always watching two things. One is you're watching the momentum of the market, right? Momentum means how the market is pushing through. Is it really fast? Does it have that power where the market is like, printing these big candlesticks? If it's printing big candlesticks, that means it's actually gaining a lot of momentum, right? It's trying to reach that level again one more time. And also, you got to look at the recent past, right? If the market, now remember this one thing, what qualifies for a good support or resistance is that multiple touches, right? So if the market has touched twice or more than twice from that particular level on a higher time frame, like an hourly chart or 4-hour charts, which means these are very noticeable levels, even for large institutional traders, for people who are professionally trading. They're looking at these levels and they want to take action on those levels. Okay, so again, you go back to the recent history, recent past, and you see what happens the first time the market hit here. So the first time the market touched this point, it comes down. Okay, it goes back up again relatively quickly and fails and goes down. Okay, and then the market is again doing another one, going back up. So basically what's happening is the market is not able to go down further below. It's reversing and going back up constantly over and over again, which means two things. One is the bulls are still in control. People want to buy these levels. The trend is up, right? The trend is up over here from this point. The sellers are not really in control. There is a bit of selling happening here, but buyers are still in control. So which means again, very important, is if the market goes back up, right, with a lot of force, with a lot of power, there's a chance the market might break that level. Okay, a break of a candle means that the price goes above that line and actually stays above that line. And if I go back, actually go one time frame higher, so above that level, the market will so if the market breaks through that level, above that level, and starts to go this way, right, starts to go up, that means that resistance level is no longer valid. It's now turned support. Okay, another scenario, what happens is whenever the market gets there, now this I'm talking about market when it's moving really fast, right, with a lot of momentum, it hits there right away quickly and then comes back down. Okay, fast, right away, comes all the way back down. That happens as well, which means that this resistance is still very good, like it's still holding. Okay, but normally this is what happens is when the market does a pullback, right, if the pullback is not far enough, pullback is not long enough, it's a very short pullback, once, twice, normally when it retests over and over again, it breaks. Okay, it breaks that level and goes higher. Not all the time, but this is when you have to watch price action very carefully and see what's happening on those support resistance levels. Next thing is we're looking at another scenario where the market is going up, but it's going slowly. Slow in the sense that it's actually printing small candlesticks, but it's getting up there. Okay, that's another scenario. In that scenario as well, it could start rejecting once, twice, 3 times before it goes back up, or it could go back down. Okay, so these two things can happen. Now, how do we trade and what do we do when such a thing happens, right? First of all, when you are looking to go against the trend, right, so this is the natural direction, is up. In this case too, it's up. So if you want to do a put, you have to remember it's risky, right? It's risky because you're going against the natural movement. The natural movement is up. You're going against that. But doesn't mean you cannot trade that. Of course, you can trade and you can make money from those levels too. You just have to know when to enter. So this is how I trade. So what I do is I wait for the market to reach that level first. So once it reaches here, I look at how the candlestick is forming on a 15-minute time frame. I don't jump in right away. I would always wait for the market. Whenever it reaches here, right, whenever it gets to my resistance or support levels, I go down on the 15-minute time frame. Okay, I go on 15-minute time frame and I see what kind of price action is happening on a smaller time frame, like a 15-minute time frame. Okay, I'll give you an example. So in this case here, okay, this is the first time ever the market reached that level. So we wouldn't even know if this was a resistance anyway, right? So it's not clear because this is almost like an all-time. We have nothing almost to compare it with. So it's like a high which has never been seen for a long time. Let's do it one more time here, second time. So now that we know the market has rejected from that 00 level, so 1.2 to 700 and above 700, that itself is a pretty strong level. It was a clear, nice pullback, pretty long as well. Now 15-minute chart looks pretty long, which is nice. And then it goes up, then tries to retest one more time. So the first time it gets, now it doesn't have to reach perfectly on that spot, right? It doesn't do that all the time. It can get very close to that, and then you'll see rejection. But what's very important is look at this candlestick. This is a very strong bearish candlestick. Okay, this is adding more confirmation to my analysis and to my decision. So I'm going to decide to do a put here for the next 30 minutes or so, because I'm looking at, first of all, there's a resistance level. The market had tested that level. It rejected very, very strongly. So it's kept that momentum. The momentum now has changed from, in fact, even this move that you see towards the upside, this one, right? This current move there is not very, very strong. I mean, there is kind of a channel going on, right, before it got back here. But what's very important is the way the market reacted as soon as it reached that level. See that very strong rejection, that red candle. So my next action, my plan of action, is to do a put for the next 2 or 3 candles. So I need 2 or 3 candles to kind of win this, right? So I would place a put. So either you can place a put right away as soon as the candle closes, here. My suggestion is that, don't do that, because sometimes what happens is that as soon as you get in when the candle closes, price will go down for the next whatever time you're choosing, and then come back up and closes right there, right on your entry, which is kind of risky, and you can lose those trades. But rather what you want to do is you want to wait for the price to go up a little bit, retrace a little bit. If it retraces, this is a very, very strong possibility, right? So, and this is where I enter and I would win. Let's look at some more examples. I'm just going to use this strategy. So this candlestick is very important. I'm not going to go into the names. The names are not very important. This is called as engulfing, but don't confuse yourself. Terminology is not really important here. You want to look at the size of the candlesticks is very important. And also you want to look at another type of candlestick, which is called as a pin bar. It basically looks like a long wick and a very small body, right, like that. Or also you can look at hammer. So again, a long wick with a tiny body. Okay. Now these candlesticks, what they represent is that there's a strong rejection on those levels. That's what we're looking at. So a rejection means that there's a strong push down from the top to the bottom, right? In the same case here as well. See, there's a strong rejection on that. That's what we're looking for. So a rejection means that the sellers are coming back very strongly. They've caught the momentum. We just want to follow that momentum. That's all we are doing, right? We're just following that momentum. But again, we're not entering right away. We are waiting for some sort of a pullback to happen. It, most likely, most of the time it does. You see some kind of a pullback, and then you follow that along. You need 2 or 3 candlesticks to win. So add 2 or 3 candlesticks. If you're looking this on a 15-minute chart, you can add as a 30-minute win, 30-minute expiry. So you would, once this candlestick closes, or even when you enter close to that level, you need 30 minutes, which you would end up somewhere here, which is a win, right? So that's one example. Let's look at more examples. Let's look at AUD USD maybe. So I need to see proper support resistances, right? So which means multiple touches. That's very important. So here I'm going to take this example. Okay, so again, two touches. The first touch is here, second touch over here. Okay, so these two touches are confirming that the market is holding to that level very strongly. Okay, it comes down, it doesn't go all the way down. It starts to kind of range. It starts to kind of range like this. It's not really heading down, like that, which means that, the overall trend, since the overall trend is up here, it could possibly continue that, right? Continue the upward momentum. But what we are concerned about is the rejection. The rejection has happened. It happened once, it happened twice, and now we're waiting for the third time. If the market is reaching the same level one more time, we need to know what to do. Okay, again, look what happens when the market reaches here, right? Okay, before it gets to that level, look at these candlesticks. They're kind of bullish, right? They're pretty bullish. So you're seeing more greens than reds, and pretty decent sized candlesticks. But that's still okay. We can still possibly do a put. Now this is kind of deciding factor, right? So this candlestick there, it tests our resistance. It closes. This is the hourly time frame. So as soon as it hits that level, I'm going to go to the 15-minute time frame. I'm going to see, actually I have to go back a little bit. Yeah. So I'm going to see how my candlestick looks like on the 15 minutes. So as I said, I would like to see a proper engulfing or either a pin bar, right? You can call a shooting star, inverted hammer, something like a smaller body but a long wick, anything with long wicks, or a fully engulfing candle. All right, so this trade is now good for us. So the price goes back down, that's fine. Again we are waiting for price action. Now it gets to that level here one more time, and this is where it gets messy. We're not really interested in this kind of price action here, because we see first of all this strong bullish candle, and then a little bit of rejection and continuation and a bit of a range of fake breakout towards the upside, and then there we go. Now this is where it gets interesting. Okay, sorry, where was I? Yeah, so this is the interesting scenario. So all this price action here doesn't mean anything, because this was just a fake break. It doesn't really decide on, we don't really decide on what to do. But look what happens when price comes down, right? Comes down, and then this candlestick forms, and then the next one forms. It's pretty strong bearish. Okay, so on the 15-minute, right, this candlestick again is not the one that we are looking for. Okay, as I remember what I said we're looking for an engulfing or something with a long tail, a long wick. Okay, again, skip that, that's okay. Now these kind of trades, you might get 3 or 4 a day. That's pretty much it, but these are very high probability trades, right? Let's keep looking. Again, we have that level drawn. Retest, nothing happens, nothing really happens. So again, the market now breaks, and it just changes its course and starts to go back up, right? So as you guys can see, we don't get a lot of opportunities using this strategy, but what's very important is that whenever you see something like this, a setup where the market has reached a resistance or a support, and it forms a very nice candlestick after the previous one closes on that level or near that level, this adds more confirmation to your analysis, and you can go against the trend based on that. You don't want to be going against the trend, like the natural move, if the market is not giving you the right kind of confirmation, right? So you need to be very sure of that. You will lose your trades if you start going against your trend and you don't have a proper strategy in place. I hope this video helped you guys. Do leave a comment, and don't forget to like this video. Try this out. Try this strategy out. back test it, look at different time frames and see how you're doing, and let me know what you think. We can add more confirmations to this, like you can, for example, we can add RSI to this when it's overbought or oversold to kind of get more confirmation. But really what you really need right now as a beginner is to understand price action using candlestick patterns, understanding what support resistance levels is, and understanding the overall nature of the market, right? If the market is uptrending, downtrending, ranging, you got to be able to figure that out. All right. Thank you for listening to me. Thank you for watching this video, and I'll see you guys next time. Have a great weekend, guys. Bye.